Oil-Dri Corporation just wrapped up its Q3 Fiscal 2026 earnings call, and there's a lot more going on beneath the surface than a quick glance at the numbers might tell you. From record-breaking cat litter sales to a quietly powerful cash engine, this is a company that has been making big moves, and if you are not paying attention, you might be missing one of the more interesting small-cap stories in the market right now. Stay with me, because we are counting down the top 10 takeaways from this call, starting with number 10. Coming in at number 10, Oil-Dri has been running one of the most aggressive capital investment programs in its history. Over the past 5 years, the company has spent nearly $32 million per year on capital expenditures, double its historical average, to modernize aging facilities. Depreciation is a lagging indicator and is now catching up, which is creating short-term margin pressure, but CEO Dan Jaffe made clear this is a deliberate, strategic trade-off to build a stronger, more resilient operation for the long term. Number 9 brings us to artificial intelligence and R&D. Oil-Dri's research team is actively exploring AI tools to speed up innovation, improve market assessment, and find new applications for its sorbent minerals. The company sees AI as a meaningful accelerator for bringing new products to market faster, something that could pay dividends across all of its business segments in the years ahead. At number 8, the fluids purification segment is getting a quiet boost from geopolitics. The ongoing Middle East conflict has driven up demand for jet fuel and refined oils, which directly benefits Oil-Dri's mineral-based purification products. Refineries are running harder, margins are high, and sustainable aviation fuel capacity is expanding. All tailwinds for this business over the next 12 to 18 months. Number 7 is the headline revenue number. Q3 net sales came in at $126 million, representing 9% growth compared to the same quarter last year. Both the retail and business-to-business segments contributed, with strong demand across cat litter, agriculture, and animal health driving the top line higher and confirming the second-half recovery the company had anticipated. Number 6 is the Amlan International rebound. Earlier in the fiscal year, Amlan lost a key account that weighed on results. But the team responded decisively, rebuilding presence at that account while also expanding the customer base in every region they serve. VP Wade Roby expressed genuine excitement about the pipeline, noting that Amlan's vertical integration and quality consistency give it a durable competitive edge in the global animal health market. At number 5, operating income jumped 23% year-over-year. That is a big number. The combination of strong top-line growth and a meaningful year-over-year reduction in selling, general, and administrative costs drove that improvement. It signals that even as cost pressures exist at the gross margin level, management is finding efficiencies elsewhere to protect and grow the bottom line. Number 4 is all about cat litter hitting record territory. Crystal cat litter reached record quarterly sales volumes, fueled by both private label and branded growth. The company also expanded into lightweight co-packaged products, launched new health monitoring crystal litter under the Cat's Pride Ultra brand, and introduced several new SKUs across e-commerce and brick-and-mortar. Domestic cat litter sales, excluding co-packaged, were up 10% year-over-year. Coming in at number 3, the board of directors raised the quarterly dividend to $0.225 per share, a 10% increase, payable in August 2026. Notably, this follows another dividend increase announced just months earlier in December 2025. Management connected this move directly to confidence in the sustainability of the company's cash generation, which is a strong signal to long-term investors. Number 2 is one of the most important metrics on the call: cash flow. Oil-Dri generated $25 million in net cash from operating activities in a single quarter. CEO Jaffe echoed his father's philosophy that earnings are an opinion but cash is a fact. That cash is funding the capital investment program, supporting the dividend, and positioning the company for continued growth without taking on excessive debt. And the number 1 takeaway from this earnings call is operational resilience in action. When Winter Storm Fern hit and disrupted competitors across the industry, Oil-Dri kept running. The company achieved a 99.9% fill rate, shipping 999 out of every 1,000 pallets ordered, and is now collecting Supplier of the Year awards from multiple major customers. That is the direct payoff of 5 years of heavy capital investment, and it represents a competitive moat that will be very hard for rivals to replicate quickly. That is your top 10 from Oil-Dri's Q3 2026 earnings call. A company generating serious cash, rewarding shareholders, and quietly building an operational advantage that is starting to show up in the numbers. If you found this useful, hit like and subscribe. More earnings breakdowns coming soon.